Hey everyone, Couch Investor back to our earnings video for today. So we already covered Shopify and Palantir. If you meet those videos, those will be in the top right corner. Now let's talk about LMND. The stock is up over 30% at the time of making this video. What exactly has happened? They reported earnings and well, there was a great announcement in that earnings report. And of course, when you have good announcements for the earnings report and short interest that is over 30%, I mean, this is a formula of a good short squeeze. And yes, this is lemonade, so we're making some good lemonade today. So let's jump right into this. By the way, this is really a great example of what a good earnings, a shareholder's letter looks like. There's a lot of information, not just revenue, EBITDA, net losses, stuff like that, but they talk a lot about the technology, the strategy, AI, their LTV models, etc., etc. Really a lot to digest here. I'll try and keep it as short as possible. So, first of all, the biggest announcement here is that they now expect to turn cash flow positive in late 2025, considerably sooner than what they had indicated last year, and expect to get there with hundreds of millions in unrestricted cash in the bank, which means probably no more raises needed. They also say here that adjusted EBITDA profitability is expected to follow in 2026, a few quarters after our cash flow turns positive. And if you've been following Lemonade for quite a while, you do know that they like to keep the expectations low so that they can exceed that. Then they talk here a bit about loss ratio, the current state of the industry, the insurance industry, etc., etc. So I highlighted a couple of things here. As of Q3 2023, we have earned about $45 million in premium from our new rates because, when there is inflation, they get to apply. These applications take a lot of time until they come back. And so there is usually a big gap between what really is happening and what you can actually generate on those policies. So as for Q3, they earned about $45 million in premium from the new rates, with a further $120 million online but yet to earn in. Further rates await regulatory approval, so that during 2024, we expect to earn an additional over $100 million from increased rates. The actions we've taken and plan to sustain will, we believe, yield a return to healthy loss ratios, though the nature of the file approval implement earn in cycle is such that it may be 18 to 24 months depending on inflation rates and approval rates before we're really caught up. Of course, 18-24 months, who knows where we'll be. And here they show basically a visualization. Inflation is decreasing as rates are increasing. Now, they talk here a lot about the LTV6 model. Of course, there's LTV7, LTV8, and then the newest one, LTV9. This is the predicted cohort lifetime loss ratio, and then they show us how the actual numbers were. If we look at the LTV6 model here, you can see that predicted first year loss ratio, 78%, and which was exactly 78%. Then they predicted first year loss ratio for Q3 cohort was 71%, and their actual first year loss ratio was 68%. So far, LTV6 has proved highly prescient, with loss ratios materializing in line with its predictions or slightly better. Then with regards to renters and pet loss ratios, they have been good and getting better, and we've seen exceptional improvement in our homeowners book when you look beyond the cat losses, which our AI can't predict. Improvement in our car loss ratio have lagged behind our other products, though this seems set to change. We are happy to share that yesterday, so 2 days ago, we received approval for a 51% rate increase for our car product in California. About 50% of our car book is in California, so we now expect this, along with recent rate approvals in other states, to steadily drive down our car loss ratio in the coming quarters. That's great news. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, I would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Here they show us what exactly has been happening for quite a while. Those things are basically normal if you're a long-term investor, if you're looking for the long term. So in the past 24 months, our gross earned premium grew 118%, while our operating expense increased a mere 19% in comparison. So here operating expense as a percentage of GP halved as GP has doubled. Of course, this company, yes, is still not profitable, but they're making their way towards profitability. Now, in 2024, we will continue to invest in both growth and technology. While we expect our adjusted EBITDA to improve materially year over year, we don't expect our path to profitability to be entirely linear. And they remind us here yet again, our investments by nature are front-loaded. So yes, while at first, by the way, don't forget, this is still an incredibly young company. So yes, they still have to invest a lot. But since this is a tech-based company, right, the underlying infrastructure is tech-based, yes, you invest a lot in the business at first, but these investments, if you look at it from 10, 15, 20 years long, then it makes sense because over the long-term period, you're going to become more and more profitable as you will need to invest less and less in the business as a percentage of the whole thing. Then, of course, they have to talk about generative AI. I mean, they've talked about this for quite a while already. So today we have LLMs trained to answer customer emails, review pet medical records, evaluate satellite and other imagery, read home condition reports, and more. We gave a sense of how AIs of all kinds enable us to do more with less at our investor day, and things have accelerated since then. Of course, if you want to watch that, it's going to be on their investors relations website. Now, they talk about the ultimate goal. Of course, their interim goal of being cash flow positive is now within sight, and we hope you, like us, take much comfort and confidence from that. Our ultimate goal, of course, goes beyond being profitable. It is to become an iconic global brand with unrivaled ability to quantify risk and service customers at the highest level of delight while shouldering the lowest cost to serve. Lemonade may not be everyone's cup of tea, but if it is yours, we wanted to give you a proper taste of what we've been brewing. And to be honest, this is probably the best report they've released since they went public. And I mean, long-term investors, while most of us are probably still in the red, unless you were one of the lucky ones who just bought at $10, $11 or so, most of us are still in the red, which is always painful, but at least we are seeing some major improvements. And so in-force premium increased 18% year over year, premium per customer 6%, total customers increased 12%, they're closing in on that 2 million total customers, which they expect to reach in this quarter. Gross loss ratio decreased 11% year over year to 83%. Then with regards to ADR, that was 85% at the end of the third quarter. It's an increase of 1 percentage point from the same quarter last year. As for revenue, that increased by $40.5 million or 55% to $114.5 million in this quarter. Gross profit, $21.9 million, increased $13.8 million or 170% year over year. As for net loss, as you can see, still losing money, but hey, we have peaked. So net loss in the third quarter was $61.5 million. And then cash and cash equivalents and investment totaled approximately $945 million. Then with regards to guidance, which again, they raised a little bit. So for the Q4 guidance, in-force premium to come in between $726 and $729 million. Gross earned premium, $175 million at the midpoint. Revenue, $108 million at the midpoint. Adjusted EBITDA, still a loss of $43 million at the midpoint. And then as for the full year, again, better than before. In-force premium at around $727.5 million at the midpoint. Gross earned premium, $666 million. Revenue at $422 million. And of course, adjusted EBITDA for the full year, still a loss, but improving. It's now at the midpoint of a loss, $187 million. And so if you look at the graph right now, of course, a huge green candle. Actually, it resembles a bit what we've seen in May. That was also a huge jump here. Then we went even higher towards July, where we reached $24 or so. But since then, well, the stock went just down back to those levels right here. So if you're a trader, probably you bought a bit at around $11. But hey, stock is now making huge jumps towards the 200-day moving average. RSI, still neutral-ish, but yeah, I mean, great quarter, great guidance. And of course, if the stock is highly shorted, well, this is basically the result. So overall, that will be it. Great quarter, great guidance. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.